What is up, everybody? Welcome back to the Russell Journal. My name is Russell, and this is my journal entry for Sunday. What is this? February 17th, 2023. I'm going to do a little something different today. Going to look really more at doing a sort of technical analysis sort of thing. Really need to firm up in my mind where we are with technical analysis and how we want to approach this market and approach this week ahead. And so what we want to do is sort of define what our support zones are, define what our resistance zones are. And so let's do it. Let's go like this. So with the way I'm trading, one of the things we want to do is sort of that you really have two types of days, and they're you've got wide range trading days and you've got really short range trading days where like the price can move 1% up and down 1% in a really small range as far as like what can happen. And then on the other side of that, as far as trading goes, you can also have these very wide ranging days. And so what you can get an example of this at is Thursday and Friday of last week. Hold on 1 second. Yes? I did. I got stuff. I'll call you later. I got a show. Okay, sorry about that. My brother called and he never calls me when he's at work, so I was kind of worried about that. Anyway, all right, so you can see here we have this like this big red candle right here, followed by this sort of small candle. And you can see, you've got these days where you have these like sort of tight trading days. And it gives you this sort of idea that you really, each one of these candles represents a day of trading. And you can see you've kind of been in this like really tight range right here on the chart where you've got this top right in here around 416. And you've kind of got this tight range right here all the way down here to 405, right? So you've got this sort of tight range stuff. And that's all off of the back of this. If you go back and look right here, you've got a rejection of that 405, 406 level. Here you've got a rejection of that 405, 406 level. And here you've fallen right back to it. And we can go back on the chart and back test this level and see where we've broken through that level, tried to stay above it, and you keep getting pulled back underneath it. You try and get back over it. You reject right there, right? And we can go back. You can see here where we fought. I don't know if you remember when this happened, this little bullish flaggish thing where it really tried to stay above that level. And this point has been like sort of a main point of contention for this. And it really has been kind of a pivot in the market. And so one of the things we can know about this sort of level, and it's this range really right in here, from about 404 to about 407, where and this is for SPY. Just I assume everybody knows I'm only trading SPY. I only ever trade the S&P 500. So anybody who's watching this, there's like two people that watch this. So like, anyway, so the thing that we can say right here indefinitely, pretty easily, is that we can look for this price in here to hold from about, I'm sorry, I got to zoom in. I can't see it. From about 405 right now, you can even go all the way down here. You can look for the extreme right here at the 18-day 404.70. This will be higher, just so you know, this 18 period moving average, it will be higher on Monday. So it's going to move up. I don't know how much it's going to move up by. I'm assuming not a lot. but you'll be up here over 405, I think, come Monday, as far as the moving average goes. And this is an interesting thing that the bulls will tend to do, where you'll get the break, right? So like the way I trade is break of a break of the slow stochastic out of overbought gives you this move typically back into the closest main moving average. Now, the two things that you have to remember about that are that, one, you're not you're not getting a move directly to the moving average most of the time. What is typically happening is the average will move up towards the price and price will move down and they'll converge at some point. Okay. On the other side of that, if you're oversold and the average is above, the price will start coming up, but the average will start coming down. And that's the inverse side of this. If you lose the overbought reading, right, or the oversold reading, then price will make a move up towards the 18 period moving average. And then on the downside, it will, if you lose overbought, which is above, extremely overbought is above 80 and extremely oversold is below 20 on the slow stochastic. And so when you come out of those numbers, you do tend to get a real good correction back into the closest main moving average. Okay. And that's basically the thesis of my trade setup is that that's the move we're typically trying to target here, is a move back into these averages. And so you can see here, when we lost it, and you did lose it partway through the day on Thursday, right? You made a beeline for that. And you even into the early part of the market, you got all the way down here to this 405.25. You got some support right there because of the breakout area. And now they're bringing the 18 period moving average up into price. Okay. Now on the bull side, on the bear side of this, normally what will happen is the bears will break that 18. You'll get one candle close below it. I'll bring you over here where you show where normally what happens. And I was tracking this. Here you go. So normally you get, like, if you're over here, you get this break below the 18, and the bulls will turn around and try and pick it back up and run it back up into that 18 period average to see if they can get another move. They can get over it, right? When it doesn't, it rejects and it goes down, and you can see that. They've tried. They tried a couple of times to get above it, and they couldn't do it over the last year. This is a different year. This is a different market. Their principles here, I believe, are the same, but trading is still trading. Technicals are still technicals. They tend to move within sight of itself. It's not entirely random. There are random aspects, right? Any one of these candles can be roughly any size to certain points, right? At any time. Okay, so really, how then are we looking to trade this market going into next week? Really becomes kind of a question of if then, right? You can see here so there's a lot of stuff here that we want to look at. First of all, you've been in this real crazy bull trend, right? Like, it's been up here, and you can zoom out here. And you can go all the way back to like the September, October lows, whatever this was. And you can see you've put in this real major shift in trend in the market. You've got higher highs, higher lows. You've got sort of a higher macro setup of higher high or higher lows right there. And you really got a higher set of macro setup with higher high and higher lows here. Where you're in a real weird thing is that as of right now, you are in what is basically this bear channel right here. and I'll show this, I'll draw this out. We're in this bear channel right here. So you're really trending back down into this. Okay. I'll go ahead and make this really thick. We'll make it an arrow, and then we'll even make it a darker color right there. Okay. So you've got this channel that's like sort of trended down. You got lower highs, lower lows coming into support right here. Now, where you're at is you are at a breakout area into this. And what you want to see happen from here, from a trend sort of perspective, is you want to come off of here and make the move back into this into this 416 level. Okay. Right in here, the 416.30s, right? That's really what you want to see him do, as far as like seeing if you can't get higher prices. Now, what can happen in here is you can get a double top rejection. You can reject. Now, again, this is not, okay, so what I want to be very clear about, okay, we are not predicting the market here, okay? I want you to understand, this is not a prediction, okay? This right now, what this is my sort of book report on is this concept of market structure, okay? And concept of market structure would, like, market structure itself is a series of trends that are either higher highs with higher lows or higher lows with higher highs. Okay. So there's three structures that we can get from this place, right? Or there's a bunch of different structures that can develop actually from this place. And I will, let me grab something that we can draw with very well. Okay. So you've made the run up into this. You've made the pullback into here, into the 18 period moving average. Okay. Now you've got other sort of setups that can happen. You can blast right through that, going all the way up here. This is one type of market structure. You can come in here, you can bounce off of that couple, 2, 3 different times, put in some sort of head and shoulders pattern, and reject off of that. Or you can put in some sort of head and shoulders pattern and go down. You can put in some sort of head and shoulders pattern and go up. There's any number of structures that can develop off of this range, right? And there's nothing to say that you won't just, in all honesty, like, there is nothing to say that we won't, you trended down to here, you bounced up, right? If you got your swing line, you'd be like this, boop, 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 down to here. You got your bounce up here, right? And there's nothing that says that you don't gap down tomorrow and just make a nosedive, right? So the question then is how am I supposed to trade this when there's a lot of different possible market structures that could take place here? How do I decide which way are we going? Which way are we not going? What are we doing? Right. And so where I would be with this is, first of all, I'm going to go look at my 4-hour time frame. And there's a couple of things I'm going to look at on the 4-hour time frame. Okay. One, the reason I came to the 4-hour time frame is because I want to see what's happening inside of the candle bodies and where we're going. Okay. You have a market that is quite literally trying to correct. It's trying to correct an overbought market. Okay. There are two things that I think are very interesting about this. One, you are trying to get back to the 18 period moving average on the 4-hour time frame. Okay. You have not done so yet. Okay. That would speak to me that so let's go in and say we're going to trade this tomorrow. What am I looking for tomorrow? Okay. So tomorrow, what I'm looking for is I'm looking for either a long or a short off on a break of the 18 period moving average on the 4 hour. Okay. I am looking for this to start to move up through this range right in here between the mean and the 18, somewhere at 408, 409. I'm looking for a move through that, a decisive move through that. Either A, we gap above it, and I would look for a long position right here, right? I would be looking for a long position on a move above this, like 40. Where are we at? What's that number exactly? 409.71, right? So I'm looking for a move above that and a strong move above that, right? And the thing that you'll see that's really interesting, and this is stuff. Okay, so you lose the embedded reading here. You hit the 18 on the 4 hour. You bounce off of it. Okay, so the first thing you want to remember is that the first challenge of a major moving average is usually rejected. Okay, I would say 18 period moving average on a 4 hour time frame is a pretty major moving average, right? That's going to give you what 3 days worth of trading in that one average, right? But the second time you come back and test it, usually if you're hitting something 2 times, you're going to move right through it. You're going to break through it. Okay. Now, the thing that saved it is the 18 on the daily and this breakout area right over here, right? But like where you are with this is you really got to wait now to see if you get a break of this or if you get a rejection from this line, right? So if you start to see candles going red here, right, then you can flip short off of this, off of this 18 period moving average, and you very easily then target this lower Bollinger Band on like the 4 hour. Okay. Like you can, and you could be very comfortable in this trade. You could very easily target 400, right? But if you get a break above this, right, you can look to target, the upper Bollinger Band up here. You can target this, you can put in like third and secondary targets, right? You can put in a target here at 414, you can put in another one here at 416, even up here at 418. You can even start to target this, like, right, that 418 up there on the upper Bollinger Band. So you can target some of that stuff up there on a break of the 18. But what you really want to see is a clear, decisive candle close above this, this 491.17. The other thing that you can look at here is you can see that, you got buying pressure from below this line. From 405, you got buying pressure back above, kind of above 406, right? So one of the things you can do is you can go long around this 406 area, and you would use, so this is going to create, you've created now basically a swing low point. Okay. And I'll grab this one again so we can look at it. So you've created this sort of swing low right in here. Okay. So there's a couple of things that you can do with this. Okay. So there we go. Now, all right. Now I get my thoughts. All right. What you're probably going to have happen here, especially as far as the 4 hour is concerned, right? You're going to go up, you're going to hit this 18 period moving average, and you're going to reject back. Okay. And what they're going to look for in here is this double bottom type scenario, right? This is what you usually see here. You get down, you break below the 18. Let me see if I can find an example of that. What you tend to do on a break and reclaim of the 18 period movement. Let me find a really good decisive one. It like this over here kind of happens, right? Like you got up here, you got above it, and you pulled back. You created a higher low type situation. I'm going to see if I can find like a double bottom scenario though for this. Might have to go back. It does happen frequently. Not seeing one. Does it not happen on the 4-hour as frequently as I thought it did? It doesn't happen on the 4 hours frequently because I can't even find a really good one, right? You can see here, you typically get a rejection of the 18 and you come in and you create a higher low on the 4-hour, but I'm not seeing that sort of scenario for the double bottom. Yeah, I'm not seeing that double bottom scenario on a 4-hour time frame. And you know what? That would make sense, right? Like if you looked at your first hour and you moved up to the 18 on the first hour, that would make sense. And you reject away and then create a, your double bottom could be back then here. All right. So I've basically fucked myself in this. All right. So here we go. So from a simple perspective, a retest of this 405 level, that is simply where you go long using that same level as your risk, right? So you get here, you look for the bounce to start to happen off of here, you get long, and you're just basically risking that level right there. I don't like it. I don't like any of this. I mean, look, I don't want to run in here and go blindly like, okay, you've had 2 4-hour closes that are green, but I mean, you're looking at a potential. What do you got? 1, 2, 3. 1, 2, 3. A, B, C. I mean, you could be 4, 5. You could be a 5-wave corrective move there. I don't even really want to do Elliott wave. I don't like Elliott wave. That's what I would do right there. See that? That was your resistance from Friday. I'd look at 2 long trades, period. Okay, you're overbought as shit right up here. Where are we at? 408.20. Hold on. I got to pull up. What time is it? 3:15. Let's go look at the Dow futures. Okay. We're going through this. We're gonna look at this. We'll pull this up. Okay, so the futures are flat, slightly down. NASDAQ is down. Okay, yeah, that's okay. That's pretty interesting. We're gonna run over here to QQQ. I'm gonna look at QQQ's chart. And I want to look at it on the daily. Okay. Okay, what am I thinking here? Didn't make it to its 18. I mean, that didn't hit any price targets. Didn't test this level here. I mean, the only thing it tested was this. So the question is there a rotation out of tech? I don't think so. There shouldn't be if oil continues to drop. Oh shit. Nope, oil's going back up. That's USO. Oil gave itself a real nasty little double bottom down there. Can we see on a, let's go to a weekly basis. Okay, there we go. Higher high. Okay, you got a potential reversal happening in oil. We'll see. If oil keeps going up, stocks might sell off. Or they might go up. Never mind. None of this is telling me anything. This is pretty clear. All right, let's get rid of all this shit. We don't need any of it. All right, let's simplify it. Pull back here. Okay. This is your breakout zone right here. For SPY. Right there at 406. So above 406 is clearly bullish. And this is clearly bullish. You've held this trend line. There we go. So in a world of trend lines, unless we open up here, you move to the right. Unless you open in this right here above 409.70, unless you open up there, you're this sort of trend is dead. Well, it won't be dead, it'll just be needing to correct. I don't know. From the simplest perspective, see that right there? Yeah, I mean above 406. You're bullish, and below 406 you can be bearish. But even then, below 406, you can really only target 400, break below 400, and you can really only target, you'd like to be able to target that 388 or even Nah, not even that. That's your real actual swing low right there. I don't fucking know. I have no idea what I'm doing all of a sudden. I thought I did. I thought I had this figured out. Above 406 is bullish. Below 406 is bearish. It's pretty simple. Get above 406 and stay above it. You know, you want to look for the break here now at 409.70. Now that you're above that, you'll look for the break above 409.70. Hopefully momentum turns up. Yeah. I'd look for, like I said, I'd look for it to go up and hit this 409.70 tomorrow and then fall away, because that's the 18 on the 4 hour. Jesus. Why is this so hard? You really haven't got any signals. I mean, coming into this and then falling off of that doesn't seem ridiculous. I mean, it's got to get a strong move off of here. But, so probably going to get a move into this tomorrow. Probably won't stay too far, but we get CPI on Tuesday. It's probably won't be making any freaking decisions till Tuesday. Maybe there's no trade here. Came off of that into this. This could be the top of your range. On the 5 minute, though, that was the top of your range. On a 5 minute basis, you've got higher highs and higher lows. You got a couple of options. Pull back to there. It's really a no-go. Pull back to this peak, test it, and then continue on. But even then, you've basically got to wait for momentum to calm its ass down. Yeah, I think it's pretty clear. Above 406 is bullish, below 406 is bearish at this point. That's what I would say. I don't know, guys. I really don't. Well, we will be watching tomorrow. I thought I had this clear. Above 406 is bullish, below 406 is bearish. So so am I looking then for a pullback to 406? Is it going to pull back to 406? Do I need a break of 40? I would say you probably need a break of 409.70. If you get the break of 409.70, if you get the break of 409.70 and you stay above 409.70, that would open the door to higher prices. But I'd say you couldn't trade it until you either A, pull back and hold support at 406, or go up and break above 409.70. That is a plan. All right, we have a plan. You need a break of 409.70 and to get a long entry. And if we can use that level as support or as our risk, there we go. We have a plan. Break of 409.70, using that as our risk, that will be our risk level. And then if that rejects and pulls back, we're looking for a pullback to 405 or 406. As long as we're above 406, you can use 406 as your risk level for your long entries. Okay. So do you want to get short? I probably don't want to get short. I don't think you're gonna nosedive here. The one thing I will say is you probably won't be trading on Tuesday. CPI day. We do get CPI early in the morning, so all the moves get all crazy early on. So that's kind of where I'm at. All right, that's going to do it for me. I have my plan. I have my game plan. Look for a break above 409.70. And if we stay above 409.70, that should open the door for higher prices, say 412, and stuff like that. If we fall below 409.70, that's where I'm going to stop out. And then on the other side, look for a pullback into 406. And if we get the pullback to 406 tomorrow, look for a long entry there. That would be what I say. Okay. Anyway, that's going to do it for me. I think I got it. Anyway, you guys have a good one. The Russell Journal, written and hosted by me, Russell Liss, produced by Social Media Shows, executive producers Maria Pereza. And until tomorrow, pretend I said some sort of catchphrase.
This show is brought to you by Michelle Kubiak with Berkshire Hathaway Home Services. If you're looking to buy or sell a home, call Michelle at 702-683-6576. Her license number is S.48606. This show is also brought to you by Hand and Stone Massage and Facial Spa, located on Silverado Ranch, here in Henderson, Nevada. Restore, relax, and refresh. Let's not forget our very own Merrill and Merrick comedy show. This fun, comical TV sitcom duo with Social Media Shows Network loves to make you laugh. Mahel Empire Productions. It's a filmmaker based in Las Vegas, Nevada. Founded by Michael and Sonny Mahal, and are dedicated to making feature films. Turn your power on with Broken Bulb Productions. Owned by Russell Rapp, an independent filmmaker based out of New Jersey. This show is brought to you by, let's not forget, our very own GI Connections. It's a non-profit organization that connects veterans with resources. We're also proud to recognize Prolific Arts with Sonia Scott. Painting is the expression of emotion and feeling deep within one's heart. Let's not forget Matoma Environmental Technologies. Global research, development, and manufacturing of innovative photocatalytic products. Our show is also brought to you by Carmelo Rodriguez, who is the author of a best-selling book called Smile. It's based on true events. It's the story of a couple building a family. Get your copy of his book at Amazon today. We also love our musicians. Think about Frank's Tribute, an all-star band. It's a Green Bay-based band with Let Me Be Frank's Productions, family owned by Frank Hermans, who happens to be a veteran entertainer.
Welcome to Social Media Shows. Have you been watching social media shows recently? Of course you have. We have been live streaming for 4 years across social media platforms. We produce over 70 shows with over 1,000 episodes. In the process, we've helped over 100 creators realize their dreams and start their own show. We give platforms to promote your business. If you are an artist, if you have an event, if you are entrepreneurs, or if you have a story. If you haven't done it yet, go ahead and subscribe and follow us on major social media platforms. And if you have a great idea of a show, join us. Social media shows can help you produce and live stream your own show. Let us help you make your dream become a reality.
Hello, everyone. This is Joseph Skoda with Social Media Shows. Well, I thank all of you for your support through these last several years, and it's been a lot of fun. We've given people a voice they never had before. Now, Social Media Shows is always collaborating with our veterans to help them do things and help out the veterans who are struggling today. And we teamed up with GI Connections, connecting veterans with resources. So please consider helping and donating to this great cause because we're always doing things for veterans. So GI Connections, Social Media Shows, and you is what makes the world a better place. Once again, Joseph Skoda, proud United States Air Force veteran.